Let's talk about your personal investment thesis in Charlotte. Last time we talked about this, you were looking at Gastonia, you were looking at Charlotte, and you're thinking, well, geez, do I need to pick up property? Should I not pick up property? You mentioned the 4 times lift. Maybe give a little background on you, who you are, Renter's Warehouse, and then, of course, the lift areas, the lift factors that you considered in Charlotte.
Yeah, sure. Hey, happy to be here. So let me just jump into the Charlotte thing. People know who I am or they don't, but what I say is more important than what my title is over at Renter's Warehouse. So I'm in the process of executing on an investment thesis in Charlotte. I moved from New York to Charlotte 5 years ago. Charlotte is one of the top 5 or 6 investment markets in the country based upon the core fundamentals of people moving from the colder climates and the higher cost of living markets up north and coming south. And Charlotte is a mecca of finance jobs, and it's a phenomenal place. And so my whole philosophy about investing is that I know myself well enough to know that I can't deal with heavy repairs. I don't have time and I don't have the inclination to want to do that. And so I don't try to find deals based upon houses being in distress. And I don't try to find deals based upon people being in distress because I just don't like living that way. Mm-hmm. I focus on markets that have upside coming to them based upon changes happening in the market. All right. And so real quickly, Charlotte overall has lift because of the migration coming down to the Carolinas. Right. And then within Charlotte, I wanted to find some human intelligence that I could bank on that would give the properties that I bought and the neighborhoods that I bought in extra upward pressure on demand, because upward pressure on demand means prices get higher and rents get higher over time. And all I'm trying to do is outperform the market. Right. So that's the way that I get, instead of just doing a klutzy investment of buying a house in a good place in a good condition and paying market value. I buy houses in good condition and I buy houses at market value, but I buy them in places that are popping right now. And so we talked and we went into detail last time, and so people can go back and hear that episode. But real briefly, there's a neighborhood just west of Charlotte that is right next to a place where Amazon is building a distribution center that's going to have 2,500 jobs. And this little neighborhood is a low-income neighborhood. The houses are between 75 and 150 grand, and it's going to see upward pressure on the values because of the proximity right in between the new Amazon Center and downtown Charlotte. So that was good enough for me. You go another 8 or 10 miles west of there was a town called Belmont, North Carolina, that had a new train station that has not yet been approved, but I'm paying really close attention to it. I believe it's going to be approved. That's going to be light rail for commuters to get to downtown. Real estate values are already popping there as a result of the potential of that. And then another 10 miles further out from there is Gastonia, which is simply a suburban town outside of Charlotte that has appreciated more slowly than the other suburban towns in the other directions around Charlotte, like Huntersville to the north, Concord to the east, and Ballantyne to the south. Mm-hmm. Gastonia hasn't caught up with those markets, and I think there's no good reason for that. And so I think it's going to catch up. And so based on that, I'm buying 2 houses in each place. The update was that after we finished the segment last week, me and Nathan, who's the man who videos this show in here and creates video content around what we do at Renter's Warehouse, we decided to do something that you and I have been talking about for a year, which is we jumped in the car and we took off to go and eyeball these things, to do the human intelligence that everybody should do. If you can use the data the way that I teach you and use reading and paying attention to people trends, population, migration, jobs, demographics, people sensibilities that are causing them to move from one place to the other, if you get a good vibe and a good feel for that, then it makes sense to go and see it with your own 2 eyes. Put your feet on the ground, make sure that you're not missing something, and try to confirm your thesis, right? Mm-hmm. And so we coined this new thing called the real estate road trip. We hopped in my car. I just got a Mustang GT. I don't know if you're a car guy or not, but Mustang GT is the greatest little thing, man. It's not expensive, as fast as can be, and it's loud, and
I saw this on Instagram, I think, or something.
Yeah, I'm going through time. I'm gonna have to have Renter's Warehouse reimburse me for my tires because I'm burning through them. Because part of the show of Real Estate Road Trip is me saying, "Okay, next stop, let's go to Belmont," and then I tear out of the parking lot and lay rubber, like the Dukes of Hazzard, like an idiot, like a person who's 16 years old. but it makes it fun for me and hopefully people who are watching that show. So we're putting our first episode out in a couple of days. So I'm looking forward to seeing what you think. So we went out and recorded that process of going to the places, eyeballing and seeing them actually doing the research on the ground. I came back the next morning. I had set up some geographic alerts in Zillow to just let me know. I drew some circles around the areas that I'm talking about. And the next morning I got an alert. And the alert, there was one owner who was selling 2 houses across the street from each other, both of them occupied, both of them exactly what I was looking for. I found him at 6 a.m. I had accepted offers by 7 a.m. via text message, and now I'm in contract a week later, and I'm doing inspections on Monday, and I'm going to buy these 2 things. And so I'm going to be executing on this thesis, and what I want people to see is that because I picked the where, I spent my time picking the where, and then the what was less important to me. Like, these things better be in good condition or I'm not going to buy them because I don't have the time or inclination, as I said, to deal with the repairs. But therefore, I also don't have the renovation risk of underestimating the renovation. I don't have the risk of having it go longer than I expect. I don't have downtime while the place is being fixed up in order for me to be able to then get it occupied and get it cash flowing. These 2 things are going to cash flow on day one. And so I had the money that I had prepared for this campaign. It took me a couple of years to gather the resources, and during that period of time, I was doing the research. So 2 years ago, I started this. 2 years ago, I felt like I was engaged with my strategy for Charlotte. I didn't rush it. Okay, these houses all became more expensive over the last 2 years, but I wasn't worried about that because I was stockpiling. I'm paying cash for these things, all right? I don't even like using debt, all right? I'm a very conservative investor when it comes to these things because I'm super happy to park this stuff, get a 7 or 8% yield on my money, and then I think I'm going to see appreciation 5, 6%, 7% a year over the next bunch of years. Even if the greater Charlotte area only appreciates 3%, I think I'm going to double up on that.
That's right.
And the reason is because of that Amazon facility and the things I told you about.
So we got to go to break in a second. What about those investors that say can't buy all cash, but they can put down 20 or 30%? Do you still recommend they buy?
Listen, sure, yeah, 30%. I like 30%. I don't like 20. The reason I don't like 20 is that it's just too close. You know, you're going to wind up you make a mistake on what you think you could rent it for, and you could actually wind up making no money on a month-to-month basis. So I would rather see you wait another year and put down 30 or 40%. All right, and that's why I make the point that I started this investment strategy 2 years ago, doing my research. I was relatively new to Charlotte. I was really reading and getting a feel for it. I wasn't impatient about it. Now I'm pulling the trigger.